Welcome to FinTalk. Today, we're discussing the consequences of failing at digital finance transformation. Our guest has more than 25 years of experience in financial services. He's built fast-growing businesses across payments, foreign exchange, securities lending, and so much more. He has a brilliant entrepreneurial mindset and spirit. He is the global head of cash management product at Mashreq, Fernando Pacheco. Hey, Fernando. How are you?
Good, Ivan. Good to be here.
Good to have you here. Good to have you here. Welcome to FinTalk. I'm super excited to have you here. You're one of the people that I desperately wanted to chat to because your experience, your journey, it's just so inspiring. So I'm just super excited to have you here.
Likewise. Thank you.
You've been traveling recently. Where have you been?
Yeah, I took an early summer break this year.
Yeah.
Trying to get the usual pilgrimage out of the Dubai heat for a little bit. So I went back home to Europe, to Portugal, which is my home country. I see a bit of family.
Nice.
A little bit of Italy as well to stock up on some food.
Amazing. Before we go into the topic, can you tell me a little bit about yourself, your experience, who you are, and where you've come from?
Sure. So, I've been very fortunate to have spent the last, 20 odd years really traveling the world, as you said, from a work and personal perspective. I've had the opportunity to work with a number of sort of the global banks and more recently with a number of startup fintechs as well. Both in payments, in corporate banking, transactional banking, and a number of other sort of very interesting areas as the financial services ecosystem has evolved as well.
Yeah.
It's been a really interesting journey. I've been able to see the industry and businesses both from a financial services provider perspective to a corporate perspective, and I've also been heavily involved with regulators on reshaping often country digitization initiatives as well. So these three lenses have been a fantastic journey through the years to have gone through.
Amazing. I love that you've mentioned three different lenses that are quite unique, but there's so much synergy between the three. Is there one in specific that you found that really helped you with guiding your career, or you had a specific preference, or just absolutely loved diving into?
Yeah, probably two stand to mind. I think the first one was my first business venture, essentially, that I've built inside actually a very large financial services organization, where I went and built a equities business out of Brazil from the ground up. It was being in the right place at the right time. It's a very interesting market. That business tells you a lot about how to manage macro risks. So I was there during the almost implosion of the Argentinian debt crisis and the contagion effect that it had on Latin America. And Brazil was very much affected to that. So I built a business, scaled it. Then that crisis hit. I had to scale the business back almost to zero and then rebuilt it again. And then that was that second time around that actually went on to become quite successful. And that's ultimately the essence of being an entrepreneur, right? Is learning to take failure as an opportunity to learn and to persevere and to be able to do it again. And often it's the second, third time that you're successful, right? So
that's amazing. I really want to learn more about that experience specifically, because you have this unique set of skills and experience where you've done both the startup entrepreneur journey, the SME space, as well as the large enterprises. When you had to build a business, realize that there's a macro event happening that's going to directly impact you, scale it back down and then scale it back up. How was that journey?
Yeah, look, I think specifically in the financial services organization, often these businesses look a lot at country risk and counterparty risk. And what's really interesting post the 2008 financial crisis, I think particularly counterparty credit risk also became a very big thing with corporates. Probably wasn't as developed at that time. Banks already had very sophisticated models around this. Inevitably, these crises always hit you, often unaware, right? It's not like you see these train crashes coming years ahead. But what you do in some of these large organizations, you do a lot of preparation, a lot of analysis, a lot of what-if scenarios. And the limits that you put around these businesses, whether it's counterparty limits, whether it's country limits, whether it's product limits, I think keep a very strong sort of governance and risk management sort of environment around that is designed to protect in worst case scenarios. So you go through a lot of these scenarios, but banks have been dealing with that for many, many years because of the regulatory environment they operate in. I think what became apparent post 2008 is that counterparty risk really came into the spotlight for corporates, particularly. I saw a lot of corporate treasuries start to adopt, a lot of these limits as well, much more prevalent in their day-to-day business, primarily to diversify risk, essentially. Historically, they may have only been dealing with one or two counterparties, for example, in some of their acquiring of financial services products. And they started to really look at that and go, I need backup options. I need the ability to be able to operate if something goes wrong with one or two providers, essentially.
I love that. The amount of insight you've just given already, and we haven't even dived into the topic itself. One of the main things that popped to mind as you were explaining that was the risk management, right? With the focus on making sure that the business continues to thrive under, the 2008 financial crisis and many others. How did digital finance transformation come into play, right? How essential was it for the survival of the business?
So I think the key probably ingredient in that crisis specifically was around liquidity and cash flow specifically.
Liquidity and cash flow.
Yeah, it wasn't, you could be the largest company in the world, you could have a very strong balance sheet, but if you couldn't liquidate that balance sheet to be able to give you liquidity to be able to operate from a cash flow perspective, it became apparent that cash flow is everything. Actually, you could have a company that could have a very strong balance sheet but could still go bankrupt, essentially. So I think it brought the spotlight onto cash, and I think increasingly around that, it brought the spotlight onto how much visibility do I have, especially in larger businesses that are already operating across multiple locations, have lots of bank accounts, etc. How important real-time visibility of that cash at any point in time is. And the ability to then very quickly mobilize that cash across that company's operations, whether cross-border, whether between business lines, actually became, a very strong theme that came out of that. And that itself then led on to and leads on to a lot of treasury transformation projects, which are interlinked with finance transformation projects as well. But I think, what's surprising for me, and I've come in and out of, let's say, this transactional banking environment where, we're managing the cash flow for companies, how much the themes that companies still put at number one haven't changed over the years. And number one is still visibility to all my cash flows.
Yes.
It's such a simple, fundamental building block. And you'd think by now, you'd solve that, right? It shouldn't be something that we're still talking about in, 2024. And it still is, because it's difficult, and as it gets more and more difficult, particularly the larger the company you are, when you start to have very diverse operations, etc. But yeah, I think it's relatively important for everyone, actually, not just large companies, equally for startups to really get a grasp on how they set up their financial environments and that access to cash and liquidity, and to have backup options, right? So that if something fails, if I'm short of cash, I need to have, for example, access to funding at the right points in time from a variety of different sources as well. I think that's important.
Amazing. And what would you say are the consequences of not having these fundamentals in place?
Worst case scenario is you hit a crisis like this and you go out of business very quickly. All right, that's the worst case scenario. Worst case scenario as well is that you can't deliver the services ultimately that your clients depend on. And depending on what sector you're in, that elasticity between you being able to mobilize alternative solutions to keep your business running can be very short in time frame, right? I mean, in today's real-time environments, if you look at e-commerce, a platform goes down for a minute or two and you've got, clients screaming, right?
Yeah, we're talking about Microsoft's issue earlier this week.
A perfect example of that, right? When you're running that infrastructure. And I think, I sort of had this term. I didn't coin this term, but it's a term that I kind of I've used, increasingly over the last number of years, which is we're in the zero patience, zero loyalty era.
Interesting.
And I think increasingly corporates operate in that era, and it makes it very difficult to grab onto customers, to build loyalty and trust with customers. And, when we look at customer experience, when we look at technical outages, when we look at payment processes that aren't fast enough, that customer experience suffers, the trust suffers, the loyalty suffers. So it's a increasingly difficult era to operate in.
That leads me to the next point, right? So I really want us to dive into what the overall problem is, right? Which is in digital transformation, what are the items that are essential for the survival of these businesses, right? And as we're talking about this, I want us to really dive into not just in SMEs, but also larger enterprises and what the impact of these are.
So I kind of think about what you really need, or the pillars and the foundations by which you go about these transformations and these projects in three ways. I call it the 3 Ps.
The 3 Ps, okay.
People, processes, platforms.
Interesting.
So, people, I think I think particularly with transformation, it is very different to your business as usual environment, right? The people that are actually running your business day to day, whether it's in a finance function or elsewhere, aren't necessarily going to be the ones that are best equipped to look at processes and look at where you need to go to in an unbiased view, right? Because they're biased because they've been doing something for perhaps a long time as well. So I think that's sort of the people aspect. I think transformation as well also requires the mobilization across the entire organization. So we may be talking about finance transformation, but finance touches every part of the organization.
Absolutely.
And I think there's connectivity into whether it's senior stakeholders, the leadership organization, particularly the sales organization. The interaction between finance and sales is so critical if you're really going to drive, the right improvement in cash flow metrics, things like day sales outstanding, pricing methodologies, how you support clients that are struggling with payments, et cetera, et cetera. So that's people. I think then on the processes, this is a space that increasingly everyone, it's not new, everyone's looking for how do you automate.
As part of that, you mentioned people and how finance plays a huge part across the entirety of the business. It's not a standalone function, or at least it shouldn't be. How do you find that the correct digital finance transformation, or realistically, finance transformation needs to be digital nowadays, right? So we could just say finance transformation. How does that impact the people segment of things? Is it the case where they now have better visibility? Because like you mentioned, cash flow is king, cash is king. Is it a case where the right digital finance transformation provides them better insights, better tools, better processes? How exactly does it impact the day-to-day employee?
Yeah, well, I think before we get into the employee, there's probably 2 key drivers that increasingly people look at. One is cost, the obvious one. The other one is customer experience as well, right? So typically, a lot of companies will look to either one of those 2 drivers or both to essentially help kickstart or to find the business case by which you go down this path, right? The people aspect then is probably the 3rd pillar, but I think it almost plays secondary to those 2 factors, because I think if you can build a business case around either I'm reducing costs, creating efficiency to then also create better client experience, that should then drive everything else, right?
Correct.
Obviously, when you automate, there is a question of existing team members and how potentially you can redeploy them. I think it's the perennial concern. I think especially in markets and companies and industries that are very manual. How do you deal with the people management aspect of things, right? If you're introducing all this automation, what do I do with my existing talent pool, essentially? And I think that is a little bit of a misnomer. I think if you look at, goes back to what we were saying around the finance function. The finance function is so much more than financial processes these days. And there is so much to look at from a value-added perspective that a finance team can get involved in an organization, that I think freeing up from process-oriented tasks to value-added tasks is really the way you should be looking at that lens. So you shouldn't be worried about what impact it has on your people. In fact, it should be career opportunities for your people to be able to redeploy them into more value-added roles, which in turn should be beneficial for the individuals, right? In order for them to grow as well.
Absolutely. Now, when it comes to these specific opportunities to increase the individual's capabilities, capacity through automation, do you have, or does it come to your mind, specific real-world examples from your experiences where the lack of digital finance transformation impaired the business and the people in the business?
Yeah, I mean, plenty of examples. And I think, in today's digital world, again, going back to that term, the zero loyalty era, right? Like,
I love that term, by the way.
Yeah.
Love that term.
I wish I could trademark it, but it's not quite mine.
We'll look into that. We'll look into that.
Exactly. But no, look, I think, as I said, ultimately, you can't look at the finance function in isolation. I think you've got to look at it as the enabler for how a business runs, and therefore, its impact on its customers, its ability to grow the business, etc. Right? And digital transformation, for example, in one area, just in terms of how you deploy and move cash around the organization, that is potentially specific to client activity. So I'll give you an example, right? Receivables reconciliation, the perennial problem that a lot of corporates have, especially the larger you get.
Yes.
Again, this is one of those problems that's been around for decades. Very difficult to solve for. The slower you are in reconciling your receivables, the slower you are in clearing credit lines for then your salespeople to be able to do more business with their counterparts or with their clients. So this is a very simple example of the kind of challenges just by a finance process, which is reconciliation of incoming receipts, potentially how much impact it then has onto the sales process and the capacity to do more.
You have two specific things or when I think of you, I always think of two specific functions. One is AR, accounts receivable, and the second one is treasury management, right? And we've had so many conversations around these two. Why is it so hard to still be able to do your accounts receivable and your treasury management correctly and efficiently in today's day and age?
So let's maybe look at those two separately, because I think they are slightly separate problems. There is one fundamental, I think, thing that underpins both, which is access to the right solutions and the right technology. Historically, the types of solutions that large corporates got access to, whether it's on the treasury side, whether it's on the receivable side, or any other, financial process, function, etc., was limited to the top end, right? You had to have access to a corporate bank, team, environment, relationship manager. And what's interesting in my career, I've managed clients from SMEs through middle market clients, the sort of the in-betweens and large corporates. And for me, the sweet spot was always these middle market clients, because they're bigger than your small business, where you can make do with, with tools that may not necessarily be scalable, right? But get you going.
Just about make it.
Exactly. You already start to get some of the problems that large organizations have,
Yes.
but you're not yet big enough, as I said, to get on the radar of corporate banking type solutions and the type of customized bespoke solutions that exist. And, you know, I think that has changed. I think it's changed through, you know, the emergence of fintechs, which has democratized a lot of these financial products, etc. I think cloud-based products that have made it much more accessible and have reduced significantly the cost to entry, right? So, you know, paying monthly instead of essentially paying massive license fees to buy, you know, monolithic systems, right? That took you maybe 1 to 2 years to implement. And, you know, it's very difficult, right? Because in my experience, most corporates, even larger corporates, if you look at treasury teams, they're typically 2-3 people max. There's exceptions to that, but that's the typical size, right? A 2 to 3 person team does not have the ability to, or has very limited ability to consume these type of large scale projects.
They don't have the capacity.
No, right? And so, yeah, it's this continuous problem. They want to do things, they want to transform operations, but they don't have the ability to. As well. And so this ability, I think, to now tap into solutions that are off the shelf, easy to plug in. You know, I think the emergence of API-based connectivity has helped a lot, right? Because integration now between whether it's with third parties or between systems has become so much easier. You know, I still remember the days when to transfer data from one system to the other required things like, you know, secure FTP type connections or what we call host to host, right? That may take a month or two to implement, etc. And it was an investment, right? Now APIs, you go into the developer portal and, you know, a tech person can easily consume that and straight away integrate data.
And that plays so well with the zero loyalty, zero patience.
Yeah.
Because if I have my ERP and I need my ERP to communicate with whatever plethora of softwares I have, if I can't access my data immediately, or if I need to even just push a button for the data to go through, you've already lost me in the sales process, right?
Yeah.
So that plays so well in terms of that coin that we need to look if you can register.
Yeah.
Trademark it.
Exactly.
We've spoken about accounts receivable and treasury management. What type of common mistakes have you seen that companies make when they're trying to digitize their finance function in their business? And how do we avoid those?
It's a lot of angles. I think, look, the first piece, probably even before you want to get going, is really looking at, have you got the right people to take you on that journey?
Interesting.
You know, as I said, I've seen examples over the years where businesses have tried to implement, whether it's new systems or whether they want to go through these transformation journeys, and essentially try to put that into a team that is already busy with day-to-day, and you're not really going to do it justice because, you know, you'll take shortcuts. You know, you won't have potentially the right mindsets. You won't have this unbiased view that I mentioned, that someone can actually critically analyze what's going on in your processes, etc., and not be invested in it.
And quite often they haven't done it before, right? So having to troubleshoot something for the first time that you haven't even seen before, how are you going to be able to do that when you don't have the tools, the knowledge, the capacity to be able to push your business through this transformation, right?
Yeah, absolutely. It's so interesting. You know, I sort of look at the lens of, I think especially in this region where we are going through a wave of companies wanting to digitize, wanting to go through that transformation, right? And you've got companies that want to do it, don't know how, don't have the people. You've got companies that have put 1 or 2 people into the organization that have the experience, that have done it before in other organizations, but then don't have the broader teams or the capacity to mobilize a project like that. And then there are those that are curious but don't even know where to start, essentially. right? So they're kind of probably the three classifications. And this region particularly, I mean, I find fascinating out of all the regions that I've worked in, because when you look at companies, and I see this both from a provider perspective, but both from a corporate perspective, you see the complete ends of the spectrum operating in the marketplace. You see companies that still operate with handling their payables, their receivables through cash.
Yes.
Signing authorities that are still, perhaps at the very top, still manual. A signature on paper is still a very powerful thing, right? Maybe for the head of the family, etc. They may have automated some of the processes at the finance function, and then it kind of goes to that final signatory, and then it sort of, often finds challenges. So it's a fascinating region where you see a much broader spectrum of starting points, and I think examples of companies that are both very manual, really, really manual, and on the other hand, increasingly digitizing and world class. Actually, I mean, some of the the newer tech businesses that have sprung up across the region are best in class, but I think they're still struggling with an environment that is still very manually oriented, right?
With that point being manually oriented in a era where being digital is a minimum requirement, what have you found that are the critical elements of doing a successful digital finance transformation?
So I think you've got to have the buy-in from the very top. I think that's quite critical. We talked about having the right people, but I think increasingly it's really easy to underestimate the work that is often needed around these projects. And I think having not just the buy-in, the sponsorship from the top, but also their involvement as well. Find ways to get, whether it's your CEO or CTO or, stakeholders or CFO, etc., actually directly involved in the project, whether that's through steering committees, for example, where you bring certain decisions, into that type of forum. Steering committee may sound quite formal, right? But you can do sort of smaller variations of that for smaller companies.
How exactly do you do that for the smaller businesses? We have experience working with multinational firms, and we've been in many steercos. We know exactly what the PowerPoint looks like when you're presenting these. But for the SME or that mid-size enterprise, how do you do these successfully?
So I think it's, this is the really interesting thing about, what I find also really interesting operating in this space is how do you stay nimble and agile, but also bring some of that governance that you have in the larger corporates? And I think it does come down to governance, right? Governance doesn't necessarily mean you're going to get less agile or you're going to be, slower moving. Governance just means that perhaps you're just bringing the right stakeholders at the right time to discuss, brainstorm, and take certain decisions, right? That may sometimes have been done unilaterally within a project team. And all you're doing now is diffusing that decision-making and making sure that it involves a slightly bigger group as well. So, for example, what I've often seen is, impact of certain system changes or components of systems and their impact on processes, on people, on customer experience, and how often, people at the top of an organization may not actually understand that. They may have never even seen the actual system interfaces. So, we may be looking at a system and we may be saying, well, the user experience isn't particularly good, but how often do people at the top of the organization have actually seen those dashboards, actually experienced, okay, what are we talking about here, right? Until you visually see the processes, the platforms. And there's a balancing act, right? Clearly, you don't want to bring your CEO into all of the detail. And so, there isn't a right formula. As I said, it's just establishing a little bit of governance that essentially in certain things both raises awareness of the impact of certain processes that these new systems and transformations are having, and being able to involve these stakeholders into that process as well.
It's interesting that you mentioned this because we are currently doing the digital finance transformation for a medium-sized enterprise. And one of the key things that we put in place immediately was that governance piece, having the steer code with the correct people in place, having the relevant meetings with the relevant project teams, and making sure that everything that is being targeted and solved is done not in silos. That is super, super important when doing a piece of transformation, whether it's finance, whether it's any other function. Now, when doing these, what type of tools or technology have you seen or used personally that have had the greatest impact on financial processes?
It depends. I mean, I've looked at both things like ERP implementations, treasury management systems as well.
You love your treasury management, don't you?
Yeah, exactly. It's, and it's very interesting, right? Because you end up in this debate, which I think is a really interesting debate as to where does one system stop and where does the other one start. That might be too much to take on in one go for a mid-sized company that just wants to, first of all, get off spreadsheets, implement an ERP, right? The central nervous system of the business. But I think what's really important in this process is you do think ahead, because, mapping out future needs of the organization and where it's going, and then eventually getting to a point where, well, look, an ERP can only ultimately do so much. How does this potentially then feed data in and out of a treasury management system, or other, modular systems that I want to plug in and around from separate vendors, etc. I think it is really important to sort of look forwards and to future, proof almost a little bit of that transformation. I've also seen some fundamental gaps that often are missed when you're looking to implement brand new platforms and systems that are important as ERPs, etc. And two in particular stand out. One is, the cleanliness of your static data. How many of these projects, because of time, budget pressures, etc., you end up, rubbish out, rubbish in, so to speak, right? And you don't actually put enough time that's dedicated to actually, as I said, reinventing the processes behind the old systems, or whether even if it's an Excel, and actually saying, do I need it? How good is the data? Because to get data that's not structured correctly into a system, like an ERP that really depends and runs on data, is also going to mean that you're going to leverage probably 50% of perhaps that capability of that system as well.
So you could have the right tools, the right process, the right technology, everything in place, but because you don't have your fundamentals done properly, right, your clean data, everything managed and curated correctly, you won't be able to be as successful as you would have. One of the things I've seen a lot is in these ERP implementation projects is a work stream specifically around data cleaning, right? Now, we always need to think about future-proofing, just like you said, and immediately my mind pops to trends. What are the key trends that you see in the marketplace today that some, of course, are going to be mainstream, such as AI, but there's also others that aren't as mainstream. So what trends do you see shaping the future of transformation?
For me, the thing that I'm most excited about and that I'm directly involved at the moment is open data. It's quite interesting. And open data, for those that aren't unfamiliar, usually has a more common term, which is open banking. But open banking is only one small part of where open data can get to. And open data is very simple. It's essentially the concept that you can easily get data out of historical systems that have gathered that data, primarily supported through API connectivity that can easily transport that data on a real-time basis. But more importantly, governed by regulatory frameworks that mandate for that data to be able to be released from, from sort of these large data holders. So I'll give you an example, right? if you're going back to that problem that we talked about, real-time visibility of cash, if you have to, as part of your process, each day, log into every one of your bank portals, download statements, upload those statements in ERP, then generate the reports that consolidate all that, that in itself may take a day or more or a number of hours. That's not necessarily real-time visibility. Compare that to an environment now through these open data schemes where, increasingly you could have a single platform that is able to consume all of these account data from multiple banks, from multiple accounts, multiple divisions, countries, etc., in real time, on demand, suck it into one place, then do already potentially some categorization and transformation around that data. That is extremely powerful. That still is in its early stages, in its infancy. And I think most corporates still probably haven't really looked at open data in that means. I'm super excited about the first phase, which is just consuming the data. But then increasingly, I think we're going to get into a world on how do you automate the movement of cash across your business based on certain rules because you've got access to data in real time. So you could set up, for example, once you've got this layer where you connect into wherever your data is and all your balances and your cash flows and your receivables, etc., then to be able to plug in AI-generated rules or other business rules, and then through the same mechanisms of open data and open banking, essentially create automation around the movement of funds. So, for example, okay, when you get in your bank account A, these much in balances, automatically move those balances into a savings account or into my Treasury account, where then funds get aggregated across all of my operating entities and then can be invested, right? That has massive impact in terms of how you mobilize cash across the organization. And then ultimately being able to aggregate these cash, invest that cash as well, means that you're maximizing the returns. So that's real tangible financial benefits. And that's the kind of stuff that I think increasingly treasurers, CFOs, etc., really want to do. This is, slightly large organizations, but the interesting thing is today, if you look at most middle market companies, they're already typically operating across multiple markets. They've typically already got accounts across multiple countries. They're already dealing with exactly the same problems that multinationals have had for many, many years. And so I think these kinds of tools and automation increasingly are as valuable for them as they are for the larger multinationals as well.
What about the SMEs that are starting to operate across multiple regions, right? When they have to issue an invoice in dirhams, but then it's actually meant to be in USDs, and the party that's actually paying is paying from a euro account. How can they start their treasury management journey to actually achieve that efficiency that we're talking about?
Yeah, so I love this use case. You've actually brought me into an area that I spend a lot of time on, which is actually dealing with exporters. Actually how I cut a lot of my teeth in the early days of my finance career. And it was really interesting because I used to work in an area that had a lot of exporters, wine exporters. It was actually a wine region. And it was fascinating, right? Like these winemakers, often family businesses, either had no finance team, had no financial processes. They were doing that at night, right? After they tended to the farm, and then they go and do the invoices, etc. And one of the biggest problems that I saw was you're competing in the global markets. This particular country and these winemakers were competing against winemakers in other regions. And if you're invoicing, to your point, in your domestic currency, right, immediately you've got one of the biggest hurdles to close sales, because what you're doing is actually pushing financial risk, in this case, foreign exchange risk, from you, the producer, manufacturer, the exporter, through to your buyer. So let's think about this scenario, right? If I'm now the buyer and I'm sitting in a completely different region and I'm buying wine from Chile, Australia, and, I don't know, let's say somewhere in Europe, And all else being equal, someone offers me invoice terms in my own currency. Which one do you think I'm going to take? I'm going to take the one in my own currency. Why? Because I'm most comfortable with that, and because I don't have to worry about currency fluctuations and currency risk, etc. And I used to have this debate with some of these wineries to say, you may think that this is not a problem for you to manage FX risk, right? And you don't want to invoice in a foreign currency because now you're creating all these processes, etc. But actually what's happening is you're not being able to control your price point of your products in global markets if you don't do this. So let me explain, right? If you're a producer, let's say in Australia, selling into Europe, and you're selling in Aussie dollars, you're completely exposed to your products being priced in euros to the ultimate buyer, floating around based on the Aussie euro conversion. You can't fix a price, right? Essentially. So today your products may be competitive. Tomorrow you may be completely priced out of the markets for something completely out of your control. And so the discussion that I used to have is to say, do you want it to be out of your control, or do you want it to be within your control? And how do you do within your control? So first of all, change the currency to the price, the currency that you're selling to. What that means is now you're absorbing the risk. And now you can actually start to look at tools like hedging, like locking in certain rates when prices are good over a longer term that actually give you price guarantee. So you know that for the next 12 months, I can sell my product irrespective of what currency fluctuations happen at a reasonably stable range, right? Then all I have to worry about is sales, my sales process, not whether or not my currency is going, to such an extreme value that is completely putting my products, out of balance, essentially. So this is a very interesting example, and I worked on a lot of this transformation with a number of these wineries in this region, and many of them were very grateful and saw immediate results from actually doing these simple changes, because all of a sudden they could actually compete much more effectively.
What kind of results did they see immediately?
So I think the ability to generate more sales, the ability to be able to generate sales through the calendar year, as opposed to through cycles. So what used to happen, typically currency movements are, often cyclical as well. And so there'd be, certain points in a calendar year where your products may actually no longer be competitive because, rates are moving against you, essentially. And what currency hedging in this case actually gave them was, one, a better customer experience, right? By saying, the importer, you don't need to worry about currency. Let me manage that for you. You just get a fixed price in your own currency. Simple. But the other thing is to give you consistency throughout the year, right? Consistency is a big thing. When you're selling and you've got a physical product, particularly where it's going into inventory, the ability to have consistent pricing is a major way by which you grow volume, right? If you think about it, if every month your price is fluctuating around like crazy and you can't give that consistency, so you either, as an exporter, you either decide, I can't do anything about that. I'm going to absorb that risk. So I'm going to sometimes sell product at a loss and sometimes product at a gain. The result of that is your financials suffer, right? But okay, I maintain my relationship. The alternative is I keep changing my pricing to adjust, right? To make sure that I have a consistent margin, profit margin. The trick there is what you're doing then to your buyers and your clients is, creating yo-yo pricing. And, if you're a large supermarket chain, you're often, you don't want to deal with that type of variability, right? What do consumers most want? Consistency of pricing.
Absolutely.
A bottle of wine, you don't want to see it for the same bottle. One day it's at $9 and the next day it's at $20. And this is a very important factor. This is a very classic example of how you can take finance processes and it has direct impact on your ability to sell, your ability to be competitive, your ability to scale and grow and win new distributors and the like. So I loved that sort of that journey that I got the opportunity to go through with a lot of these sort of small businesses, essentially.
Amazing. I love how a change in a specific process, in particular treasury management, had such a huge impact in terms of the customer journey, right? Customer satisfaction, user experience, internal controls. And I can imagine even for auditing purposes, it just simplified everyone's life so much more.
Yeah.
Now, what tools did you put in place and process improvements to help these businesses get there?
So the tools often, I mean, you can either go and invest in your own tools, which typically is not something that small businesses, they may have. I mean, going back to our first point, they now may have access to some tools, but do you really want to go and buy these tools outright, right? And so I think the SaaS model of today's world, again, like we were saying, makes it really easy, as lowers the barrier to entry and gives you access to very sophisticated tools with this very clear ability to scale up or down, dial up or down as and when you need it through the cycle, right? And that's made a massive amount of difference. And so, at that point when I was dealing with these specific wineries, a lot of the tools were provided by, for example, in this case, a foreign exchange provider that we had, which was, as part of the service, essentially. They provided the platform to be able to manage some of these things. You do need to do work around reporting, accounting treatment of some of these exposures. I think, and for many of these small business owners, a lot of that was foreign. And so what I would say, more than even platforms and tools, was actually the advice that came along with, these types of services, either or through third parties. Because, for example, try to make a small business owner understand hedge accounting. Pretty complicated.
Absolutely. They need to focus on their business, right? Not hedge accounting.
Exactly.
How did you help the businesses find, or how do you still do, help businesses find the right people to partner up with? What are the key things that you think when having these discussions, having these conversations?
Yeah. It's interesting because I do still see that businesses in general are probably still not open enough to, or they should be more open around having a much more diverse panel of providers. I think the really interesting thing is today that you can get quite focused sets of solutions, essentially. Very niche, best practice, sort of small modular components. It's a lot easier now to deal with those environments and connect all those sort of different platforms, etc. So I would say one is to have conversations in the marketplace. There is so much happening, I think, in our industries and in the ecosystems. I think take yourself from an internal environment perspective, put yourself out there in the markets, go and have conversations, hear what's going on. I learn from going to industry events because I hear what's going on. I don't learn through textbooks, right? And so I encourage business owners to spend part of their time getting themselves into the right forums to hear what's going on, to make new connections, essentially. And I think through that process, you will connect with businesses that have got really interesting value-added solutions that can come in. And often you can do proof of concepts, right? In a very low-risk way, try things. And what I would always encourage businesses to do is start small. Don't boil the ocean. I'm constantly telling that to my teams. Be pragmatic. Don't boil the ocean. Get small wins. Keep scaling from small wins. And that's how you get the confidence of senior stakeholders to buy into some of these projects as well.
I'm having deja vus of my consulting days where you'd be in the meeting and you'd hear leadership say, let's stop boil the ocean, right? I've heard that so many times. And when you hear it the first, second, third time, you think to yourself, what does that really mean? But as you're actually going through the journey, you realize that you really do need to focus on things a step at a time, right? And what you've just said is absolutely brilliant, and I really appreciate that. Now, let's talk about the word leadership for a second. you've been in leadership roles for many years now, and you've not just helped, but you've completely built and transformed functions, businesses, and so forth. To be able to do this, you need to be a successful leader, which you, Fernando, absolutely are. What should leadership really do, or what should the role of leadership be when driving these financial transformations?
I think taking people on the journey is a really big thing. It's a really simple thing, but often what I see is, and this is in organizations of all sizes, is how siloed you can very easily become. Once you get past the initial startup phase where it's just a small group of people, right, that are sitting next to each other, collaborating, and you start to create departments, etc., it is so interesting how very quickly you create silos. And silos meaning not that there's no communication, but we talked about before the interaction between finance and sales, right? Is that a working relationship or is that a reactive relationship, right? What I mean by that is...
That's so powerful.
Do sales go to finance just to get their monthly pipeline reporting and their financial reports every month? Or are you actually collaborating at the point of sale to figure out what changes, small changes you can do in pricing or the way you collect, etc., that has a material impact on metrics, right? So this is what I mean by taking on the journey. Taking on a journey is not just your immediate team, but taking other stakeholders. So, a lot of the businesses that I've led, I rely on operations, technology, legal and compliance. And often what I say to my teams is, who are often the people that people are putting business cases towards? They're your CEO, your head of the business, your commercial teams. And they forget about all these critical functions that are there often as reactive partners. We use these partners when we need them to, right? If we think about it, operations when something doesn't settle, when something goes wrong.
Yes.
Technology when a system goes down, they're called into action.
Only when it goes down,
right? Legal and compliance when I've got a regulatory breach on my hands, etc. And actually, a lot of those functions can help you get to that end state if you actually take them along the journey. Why? And I often say, why are you doing this? And the why is really interesting because it actually takes me to the second fundamental piece, which is the business case. I think, we all know that you need to put together a business case to do certain things, to get certain buy-ins. But often what I see is, because of this silo behavior, the business case isn't important, right? So you might have a finance team putting a business case saying, I want to change my process. And so I might be able to reduce my headcount. I may be able to speed up this process in the financial chain. But what they may be missing in that business case is what's the flow on impact onto balance sheet metrics and cash flow metrics, like, for example, day sales outstanding, which in turn then has a direct impact on revenue, which in turn then may even give me the ability to scale. Like we talked about how speeding up receivables reconciliation frees up credit lines and frees up more sales. But often what you see is, again, because of this siloed behavior, often these business cases aren't broad enough and they're not capturing these bigger benefits. And I talk a lot through my teams, especially in product teams, to go, what does a CEO really care about of a business? Do they care about that you've automated the process, or do they care about that you can expand quicker, right, and grow revenue and deliver better client experiences? It's the outward-facing component of the business case.
Customer experience, right?
Absolutely. So I think that's probably the second really important thing to make sure that, when you embark on this journey, you focus on.
An interesting point, and I don't think many people realize that finance or the finance function affects a lot of customers. Mm-hmm. Now, the customer isn't always the person or the entity buying from the business. The finance function could actually be impacting different customers within the business, right? When it comes to these experiences for the customer, you've mentioned the case study, you've mentioned taking people through the different journeys. when things don't go well, how do you bring it back to we need to make sure that it's delivered so that we can provide what we need to provide?
And things inevitably won't go well at some point, right?
Yes.
I think especially these large-scale projects, inevitably, involve risk, involve implementation. I think this goes back to, hence why you should be pragmatic. You should start small, right? I think dealing with small components with visible deliverables along the way, I think will lessen that risk and will build confidence as well, right, over time. I think we talked about the right governance. The right governance makes some of these risks visible earlier on in the process. So you don't wait until something is finished, something has been implemented, then you figure out, oh, I've got a massive impact on my process. Like, it actually didn't turn out the way I thought it would. It actually has made, some issues with clients or whatever, right? So the right governance should try and spot some of those risks early, doing things like impact analysis really early on as well, like going, okay, I'm delivering this. What are the worst case scenarios? And actually just thinking through those scenarios. Remember that first use case that I talked about, in Brazil?
Yes.
Right? And this is something that big organizations do really well, but equally is very important for small businesses that are growing. Walk through scenarios, plan for plan B, plan C. Have those plans in place. I think what happens is, in today's fast-moving kind of agile environment, often some of those things are missed, especially in smaller organizations that don't necessarily have the governance, right? Once you commit, and you don't think about these types of risks. So I think a couple of those things, right? Keeping it small, pragmatic, get small wins, build confidence. The right governance should create the right visibility, etc.
First of all, that was absolutely amazing.
Thank you.
Now, as we wrap up, do you have any final advice for leaders who want to start their digital finance transformation but don't know where to go?
So I think spend time out in the industry. You may be surprised that there's people out there that can help you on your journey. Don't necessarily wait until you've either got the talent or the right time to do it. I think the right time is, like, there is never a right time, right? I think often what I say is start. Starting is better than waiting for the right thing to align, right? I think people is a factor of both your internal talent team. So like we were saying earlier on, right? You could have the will to do it, but you don't have the right teams. But increasingly, as I said, I think the benefit is that the types of solutions today that are available, even to small businesses today, are very comparable to what larger corporates used to get and still get, right? And that's not just solutions off the shelf. That's advice as well. Like we were saying, it's all good to have the right tools and the right platforms, but if you don't have the advice and you don't have someone that's gone through it in the past that can walk you through that, that's equally as critical, right? So speak to peers, speak to partners, speak to people that have gone through that journey. And, as I said, I'm sure people will find plenty of opportunities to kind of engage with people that are willing to help you on that journey.
Amazing. Fernando, you are an absolute superstar. Thank you so much for joining us today.
Thanks, Ivan.
You and I have had so many insightful conversations over the last few months. And again, thank you so much for being amazing.
Great. Thank you so much. Great
Thank you.
opportunity. All right. Fantastic.